Yes, sir.
Okay. Whatever we did yesterday, that will be normal depreciation. Okay. Whatever we are going to do today is additional depreciation. Total put together is called as depreciation for the year. Normal plus additional total is called as depreciation charge for the year. Is this point clear?
Yes, sir.
Okay. You need to understand the applicability to whom it is applicable, on which asset it is applicable, and on which assets this additional depreciation is not applicable, and what is the rate. Four things you need to remember and keep it in mind. First thing, additional depreciation is available to associates engaged in the business of, underline this, manufacture or production of article or thing. First one, any associate who is engaged in the manufacture or production of goods, only they are eligible. That means to say, if associate is engaged in service industries or in the software industry, they are not eligible for additional depreciation. Okay, this is the first one. Second one, or engaged in the power business of generation, transmission, or distribution of power. This is the second one. Power sector industries are also eligible for additional depreciation. Okay. Now who are eligible? All associates who are engaged in the business of manufacture or production of articles or thing. That is the first one. All associate means every individual firm, HUF, AOP, BOI, AJP or company, whoever is there, persons, if they are engaged in the business of manufacture, they are eligible. First thing. Second thing, the associates who are engaged in the generation, transmission, distribution of power, they are also eligible. Okay. Next comes, what is the rate? The rate of additional depreciation will be 20% of what? Of actual cost of eligible new plant and machinery. Only new plant and machinery. New. That means in the previous year 22-23, whatever the asset you have purchased and put to use, only that is on that additional depreciation is available. That means to say, additional depreciation is not available on building, furniture and intangible assets. It is available only on plant and machinery, that too new addition. Or don't calculate additional depreciation on opening WDV, only on the addition it is available. You guys got? Are you guys able to follow what I meant? Understood?
Yes, sir.
Whom it is applicable? It is applicable to all associates who is engaged in the business of manufacture or production or distribution, generation and transmission of power. Okay. Few things are missing here. Here, if you want, you can write publisher is also printing. Printing business is also eligible. Okay. Hence, they are not given. I don't think they will set the paper problem on printing. How much is the additional depreciation rate? 20%. On what it is applied? On new plant and machinery. Okay, new plant and machinery. On that, additional depreciation of 20% is available. Done? Any doubt in this? Because we are going to discuss now condition. Condition means on which asset, even though it is plant and machinery, additional depreciation is not available. Okay. Additional depreciation is not available on ships and aircrafts. Additional depreciation is not available on ships and aircrafts. This is the first one, condition. Okay. Second one, additional depreciation is not available on second-hand plant and machinery. What is that? Second-hand plant and machinery. This one. See, any machinery or plant which before its installation by the assessee, before assessee has purchased this asset, was used either within India or outside India by any other person. That means second-hand machinery on which additional depreciation is not available. Okay. Next, third one. Any plant and machinery installed in any office premises, like computers installed at office, not available. Sir, how you are telling, sir, computer is not available? We saw this is plant and machinery block. In that, computer is also under the plant and machinery. It is not available if the computers and printers or computer software which is used in the computers installed in office. Understood? Next, any other plant and machinery installed in any residential accommodations, like computers can be installed in residential accommodation provided to the employees. On that, additional depreciation is not available, including accommodation in the nature of guest house. The company maintains a guest house. In that, any plant and machinery is installed on which additional depreciation is not available. What is the thing you need to remember? Plant and machinery installed in office, residential accommodation and guest house. These three on which plant and machinery is installed, additional depreciation is not available. Or if any office appliances or road transport vehicles. Office appliances may be, it could be printer, scanners, on which additional depreciation is not available. It is given here itself, office premises, office appliances, one of the same. Or road transport vehicles. What does it mean? Road transport vehicle means what? Road transport vehicle means what? Buses, car. Bus, trucks, cars, everything. See, all these things falls under plant and machinery. Okay. If any company purchases any car For the directors, it will be treated as plant and machinery on which depreciation is allowed, but additional depreciation is not allowed. If Ola company purchases the car on which additional depreciation is allowed, normal depreciation is allowed, but additional depreciation is not allowed. Company purchases the bus for the pickup and drop of the employees. Normal depreciation is allowed, additional depreciation is not allowed. Like that. Remember, forklift equipment or motor vehicle used to transport goods within the factory, like small small truck kind of a thing they use to transport the goods within the factory, not on the road. Those things on which additional depreciation is allowed. Forklift equipment. Have you guys seen forklift equipment? Have you guys seen? Yes or no?
No, sir. Yes, sir.
Like this. This will be front here, here bottom. They lift the bins stored with the materials. They take that bin from the stores and it is supplied to productions. Again it comes back another bin. Bin means the steel, what do you call? It will be like how to...
Containers, sir.
It's a kind of container, dustbin kind of a thing. All four side cover, bottom is cover, top it is open. Big 10 by 10 like that it will be there. On that materials will be stored. Those bins will be taken from stores, supplied to the production. On this, additional depreciation is allowed. Why? It cannot be run on road, no. It is used in the production. Any asset used in the production, it is allowed. Even computers used in the production, it is allowed. Like designing to design the product design they make through computers, on which additional depreciation is allowed. But if plainly they give computers, don't consider for additional depreciation. Understood? Okay. Or any plant and machinery which actual cost is fully allowed as deduction. It is now there is no such percentage. Earlier it used to be 100% for some of the assets. Especially in plant and machinery, there were some assets on which you can claim 100% deduction. Okay. Any doubt in this? On which additional depreciation is not allowed? You will have to write aircrafts and ships. Apart from that, you have to write these four. Second one is easy. Second-hand machine, plant and machinery. Third one, any plant and machinery installed in office, residential accommodation or guest house. Fourth one, office appliances or road transport vehicles. Fifth one, any plant and machinery whose actual cost is fully allowed as deduction, on which additional depreciation is not allowed. Okay. Assume here I'll just go to this. Here, less than 180 days asset is there. It is plant and machinery. Less than 180 days asset is there. Okay. On which you need to calculate additional depreciation also. In that case, you will restrict this one to 50% only now, because it is less than 180 days. Less than 180 days. The same logic applicable. If it is more than 180 days, full 20%. If it is less than 180 days, 20% of 50%. That is 10% is allowed. What about that balance another 10%? It can be claimed in the next year, provided asset should be in existence. I mean that you shouldn't have sold that asset. It should be in the company. In that case, you can claim the balance 50% of the depreciation, additional depreciation in the next year also. Understood, guys?
That means next year you can claim 30%, 20% plus additional 10%.
10%, only 10%. To this year 10%, next year balance 10%.
Okay.
For
So
this, pertaining to this asset.
So this asset only one time it is allowed, that's all, in 1 year.
No, 2 years. You can allow, you can claim 10% this year, next year 10%, provided if the asset is being put to use for less than 180 days.
Okay.
This benefit will not applicable to normal depreciation.
Okay.
Only for additional depreciation, the balance 10% you can claim it in next year, provided asset should be in existence. I mean to say, it shouldn't have been transferred or sold or otherwise. Okay.
Thank you, sir.
See, December 20, question number 20. Can you guys see this?
Yes, sir.
Okay. See, the WDV of a block of asset of plant and machinery. First thing, plant and machinery, subject to depreciation at 15%. As on 1/4/2019, you make it as 22. 1/4/22 was rupees 27,50,000. This is opening. Okay. One machine out of this block was sold on 1/7/2019. 2019 means wherever there is 19, make it as 22. Okay, wherever there is a 20, make it as 23. For rupees 4,50,000. And a new machine of the value of rupees 17,50,000 was purchased on 1/8/2019. 19 means 22. Was put to use from 1/3/23. The amount of depreciation to be claimed on the block of plant and machinery in the computation of income for the assessment year 23-24 shall be the given 4 options. You need to arrive at the answer. Can you guys try and let me know? Additional depreciation on which asset it will come? On the new asset. On this you will get the additional depreciation. Don't calculate the additional depreciation on opening. On this you will get the additional. You guys know how to calculate normal depreciation. You want me to solve?
Yes, sir.
Okay. See. Block, plant and machinery. I've already solved. Block, plant and machinery. Opening balance, how much it is? 27,50,000. 27,50,000. Consider that. Additions. Pujashri, you ask no? I am explaining, please listen.
Yes, sir. Yes, sir. I'm listening.
Okay. Additions, you have to bifurcate the asset into two parts. One is when it is put to use. If it is more than 180 days, consider that one in one row. Less than 180 days, consider in that another row. Here it is given. Here it is given. And a new machine. New machine means addition. 17,50,000. Purchased on this date. 1/8/2022 was put to use from 1/3/23. Which date is relevant for calculation of depreciation? This date, this one, or this one?
Put to use date.
Put to use date. Is the put to use date is more than 180 days or less than 180 days during the financial year 22-23?
Less than 180 days.
Less than 180 days. Consider that in less than 180 days. 17,50,000 less than 180 days. I am considering. Total these two because there is no addition. 45 lakhs. Of that 4,50,000 machinery worth has been sold. Deduct that. You will get WDV for depreciation purpose. How to calculate normal depreciation here? How to calculate normal depreciation here? First, we need to compare this 40,50,000 with the less than 180 days. If WDV for depreciation purpose is higher than this value, calculate depreciation at 15% for this question. 15% on 7,50,000 multiplied by 50%. How much it comes? If I calculate this one, 17,50,000 into 15% into 50%. Why 50%? Because half of the eligible rate you will get 131,250 is the depreciation. On the balance means how much? This minus this. Obviously, if you deduct these two, it will be on this one only, no? On the balance, 15%. You get 3,45,000. These two are normal depreciation. Understanding?
Sir, can you just tell why that 50%?
Because it has been put to use less than 180 days. Less than 180 days, we have to take whatever the rate is there, half of that rate. Okay?
Okay, okay.
These two are normal depreciation. Now, additional depreciation also you need to calculate. Have they given whether he is a manufacturer or like that? Have they given manufacturer like that?
No, sir.
No. Now, confusion starts. Whether do I need to consider it or not? Okay. First, let me calculate. 476,250. Is 476,250 is given? It is given. First thing. Okay. We will calculate additional depreciation also. We will see whether any of these two will comes. Okay. What is the rate of additional depreciation? 20%. On which amount you need to calculate? On this amount. Since it is less than 180, 20% of 50%. How much it comes? This amount into 20% into 50%. Same logic. 180 days less than. How much it will be? 1,75,000. What is the total of these two? 651,250. Is 651,250 is there? Here? No. That means additional depreciation you are not supposed to calculate when there is a lack of information. What is that lack of information? He is manufacturer or not, you don't know. Right? 4,76,250 is the answer. Understood, guys? How to calculate?
Yes, sir. So, suppose there was like additional depreciation amount also mentioned. So, should we take that amount or the
Yes.
normal depreciation?
Yes. Additional depreciation amount is given, you have to tick that.
Okay.
Normally they will not give unless question clearly states. They are not supposed to give also. Why? Because you have got two answers correct. Which one to be ticked? It is confusing, no? They should clearly mention. They will not tell to calculate additional depreciation. One thing you guys need to bear it in mind. They may not tell calculate additional depreciation also. But if the question says assessee is engaged in manufacturing of product, goods or articles, in that case, if that block pertains to plant and machinery, by default you have to calculate additional depreciation also. Okay, they should clearly specify. Otherwise, how will you come to know? Okay, guys, understood additional depreciation concept?
Yes, sir. Yes, sir.
Now, the special provisions relating to power sector companies. Which company? Power sector. Power sector companies. Okay, they are allowed to calculate depreciation on straight line method. Which method? Straight line method. Straight line method means on each asset you can calculate the depreciation. Under Income Tax Act, other than power sector, for all other industries or businesses, they will have to calculate depreciation on WDV concept. That's the reason I told yesterday, once your falls into the WDV, the asset loses its individuality. It will be in the group. On individual asset, we are not supposed to calculate depreciation. Okay, but in case of power sector, you are allowed. It is an optional. Power sector is an optional. They can calculate depreciation on individual asset basis on straight line method. Okay. Here there are certain terminologies you need to understand. One is terminal depreciation. Another one is balancing charge. Okay. Terminal depreciation means selling price of the asset less WDV selling price of the asset minus WDV. Okay. If you will write the numerics so that you will get to know selling price is 1,20,000. If the cost is 80,000. Sorry. Cost selling price is 80,000. WDV is 1,20,000. Your value of the asset 1,20,000, but you sold it at 80,000. Is it profit or loss?
Loss.
Loss. In this case, whatever is the difference, that will be called as terminal depreciation. It will be debited to P&L account. Understood? Terminal depreciation means what? If the value of the asset on the date of sale exceeds the selling price, the difference is called as terminal depreciation and it will be debited to P&L account. Understood?
Sir, can you just repeat the last part?
If the value of the asset on the date of sale exceeds the selling price, sales value, the difference will be treated as terminal depreciation and it will be debited to P&L account. The reverse case, if the value of the asset is less and your selling price is more, the difference is called as profit ideally, but in case of power sector it is not treated as profit, it will be treated as balancing charge. That balancing charge will be credited to P&L account. Which account? Credited to P&L account. The difference will be credited to P&L account when the sale price exceeds your WDV of the asset. Don't get confused. WDV means what we are calculating. Opening balance minus depreciation is always called it as WDV. Understood what is terminal depreciation and what is balancing charge?
Yes, sir.
Okay, you rarely get question on this. Okay. Here ends your depreciation. What you have to do, whatever the problem we have solved for the depreciation, same problem you solve it for the additional depreciation also. Please make a note in the question, include assessee is a manufacturer. Just include that one line and start calculating the additional depreciation also for those questions we have solved. Okay. Any confusion in that additional depreciation or in the balancing charge or terminal depreciation?
No, sir.
the case of other companies, this loss and profit will not be considered. Only in case of power company, it is being done.
Yes. In case of other companies, when there is a difference like this,
Yeah.
it will be either short-term capital gain or short-term capital loss.
Okay. Okay.
Okay, guys. See, tea, coffee, rubber development account. That means any person who is engaged in tea business, coffee business, or rubber business, for them this section is applicable. According to you, who is the who is into coffee business and tea business? Which coffee brand you guys often see or came across?
Bro, sir.
Brew, Cafe Coffee Day, Nescafe, all these things you guys have heard, no?
Yes, sir.
I will just take the example of coffee. That too Cafe Coffee Day because we all familiar with that. Okay. How the coffee will be prepared? How coffee will be prepared? I mean, coffee powder, rather.
By grinding the coffee beans.
Coffee beans or seeds. Okay. How you get coffee seeds? Coffee beans or coffee seeds? By growing, right? In coffee estate, coffee seeds will be grown. The Cafe Coffee Day assume having a estate of coffee estate, 100 acres of coffee estate. Whatever they grow, coffee, that is agriculture. Do you guys agree? Yes or no? Whatever the coffee they grow, it will be treated as agriculture.
Yes, sir.
Yes. Once it has been, seeds have been removed from the plant, it will be dried and it will be roasted and then they grind. You get the coffee powder. Right? There involves certain process. After the coffee powder, it will be sold to the consumers as coffee powder. That consumers will use that coffee powder to prepare coffees. Is that the process? In that way, Cafe Coffee Day will grow the coffee beans. They pluck the coffee beans from the plant. They keep it for dry. After it is dried, it will be roasted. Once it is roasted, they will powder it and they use that powder in their Cafe Coffee Day stores, outlets. Now you have to understand there are two aspects in this. One is the agricultural aspect, another one is the business aspect. Yes or no?
Yes, sir.
You guys should appreciate few things here. The law. When the coffee is sold, the powder, after becoming the powder, coffee is sold. Until it becomes powder and it will be served as coffee, it involves cost at every stages, right? Cost will be involved at every stages in every process. Putting the plant, it involves cost. Pouring of water cost will also be there. Until it is grown, you have to maintain that. It involves cost. To pluck the beans, you require labor. For them, you pay the amount. Once it is plucked dry, you need labor to make it happen. Once it is dry, for the roasting also you need labor. For them, you have to make the payment. Once it is grind, put it into the grinder for the powder. You require machine and the power and the labor also. Once it is becomes the powder, you will pack it. Packing charges, everything involves cost. Once it is served as coffee, you get the revenue. Now the question comes, how much to be treated as agriculture, how much to be treated as business? Are you guys understanding my point, right? The same logic will be applicable to tea also, rubber also. Okay. They in income tax, they have given some rules. If these kind of business is happening, how much to be treated as agricultural income, how much to be treated as business income. In that coffee, whatever you sell, it has the component of agriculture also, right? If cafe coffee day coffee per cup, cappuccino like that 120, 150, in that 150, the agricultural cost is also included, no? Yes or no? Whatever I explained the process. How much to be treated as from that 150? Is it agriculture and non-agriculture? Okay, there is some rules. 6, 7 something is there. See. Okay, I mentioned this one, coffee. Business income, how much? Agricultural income is how much profit percentage. If the coffee is sold of coffee grown and cured, you will grow the coffee beans and you will do the curation. Curation in the sense, whatever the moisture may be there, you will just make it dry. For that, the business income will be taken as 25%. Agricultural portion will be taken at 75%. Okay, because there is no much labor involved, the much process involved, only the minimal process, hence lesser percentage belongs to business, more percentage belongs to agriculture. If the same thing grown and cured, along with you roast and you ground, make it as powder, there its commercial element will be higher, hence business income will be taken at 40%, agricultural income will be taken at 60%. Are you guys understanding my point? I will take silence as understood. In case of tea, they pluck the tea leaves, they dry it and they powder it. There is no much process involved. Hence it will be 40% business income, 60% take it as agriculture income. You guys maybe know feeling how it is agriculture like that they do. In a year, 1 crore cups of coffee sold. At an average of 200 rupees, assume. 1 cup coffee, 200 rupees and an average, because the coffee can be at different rates, and an average I will be taking as 200 rupees. 1 crore. Is it 10 lakhs? 1 crore. That means your sales will be 1 crore into 200 for the year. How much? 200 crores your sales. When you make the coffee, it involves certain cost like raw material. Raw material could be your coffee powder, labor, depreciation on the machine, other admin expenses. Assume all this put together, it comes to 70% of the sales value. That means of this 70% is your sales value. That means balance can be taken as profit. Of this profit, 40% will be treated as business income, 60% will be treated as agricultural income. How much? Of this 6 crores into 40% business income, this is agriculture income. Understood?
Hello, sir.
Yes.
Sir, may I know? I have one doubt. May I know how 70% comes, sir?
No, I am just
Like, is there
taking
any
as
specific-
no. I am just taking
Example.
the ad hoc figures.
Okay, sir. Okay, sir.
Ad hoc.
Yes, sir.
Okay. After this, there are certain things we need to understand. Okay. Section 33AB is applicable to an assessee carrying on the business of growing and manufacturing tea in India. For claiming deduction under Section 33AB, the assessee has to satisfy the following conditions. These are all the conditions. Assessee carrying on business of growing and manufacturing tea or coffee or rubber in India. Any amount, how much deduction, these are all the deduction available to encourage the agriculture. They have given some deduction. How much? Any amount which is deposited with NABARD or 40% of business income, whichever is less, that much deduction you will get. How much deduction? Whatever the amount deposited in NABARD, amount sum equal to aggregate amount so deposited, or 40% of the profits of such business, computed under the head profits and gains of business or profession before making any deduction under Section 33AB, whichever is less, amount deposited or 40% of profits of such business, whichever is less, you will get the deduction. That means, assume he has deposited 40 crores. deposited 40 crores. This amount or 40% of this. 40% of this, how much it comes? 56 crores. Of this, which is the least one? 40 crores, 56 crores. How much is it? 56 crores, or just I will take it as, for our understanding, I will only do it thousands so that it becomes easy. Here, 40,000. Of these two, which is the least one?
40,000.
40,000 deduction you will get from this. I mean, 1,40,000 minus this. How much you get? You get 1 lakh. Of that 1 lakh, 40% is business income, 60% is agricultural income. On this, you will pay tax. This is exempted. Understood, guys?